World economic growth is slowing and the outlook for a quick recovery is gloomy. That's according to the International Monetary Fund, or IMF, which has cut global growth forecasts again. It expects growth to slow from 6.1% last year to 3.2% this year. This is 0.4% lower than its outlook in April. The IMF says there is higher than expected inflation, particularly in the United States and Europe. China's slowdown has been worse than expected, and it says there are further risks of Russia's war in Ukraine pushing energy and food prices higher.
The world may soon be teetering on the edge of a global recession, only 2 years after the last one. Multilateral cooperation will be key in many areas, from climate transition and pandemic preparedness to food security and debt distress.
TaiwanPlus reporter Louise Watt spoke to Singapore-based Arup Raha, the head of Asia Economics at Oxford Economics, about the effect of a slowdown in global growth on Asia.
What are the implications for Asia when it comes to the uncertainty that's out there at the moment?
A fair amount. I mean, Asia is no stranger to crises. I mean, the global financial crisis, the Asian crisis, .com. We've had our issues, but we've come out fine, and there have been a few things that have always been in our favor. The first is that China has barely blinked through any of these crises, so we've had that element of stability and growth that has helped Asia. The second thing that's been there is that the Fed has, just once it was relatively steady, but otherwise it's been cutting interest rates. So, liquidity conditions have been there. This time the Fed is raising rates. So you take away the two real pillars that have helped Asia through previous crises, both are in the other direction. One further element that I think is important is that not only is global growth suffering, which is going to affect Asia, but the nature of demand as countries open up, the nature of demand is shifting. There's a fair amount of pent-up demand for services, which is going out to eat or travel, whatever. And as that starts expressing itself, demand for goods is going to go down, and goods is what we export. So I think it's going to be a relatively difficult period for Asia in terms of the external influences.
And what about Taiwan? Because Taiwan is also suffering inflation like elsewhere in Asia, but it has the semiconductor industry to keep its head above the water, as it were.
Taiwan's economy, if you take the external part of it, which is probably what drives it. Now, there are two elements to it, and I think both are fading right now. The first is China. Chinese growth matters a lot to Taiwan. And China's growth, if you saw the second quarter GDP numbers, is probably, China is doing its worst growth performance in 40 years. And it's going to obviously have an impact on Taiwan. The second is the electronic cycle. Taiwan has benefited from it, but it has been the nature of demand over the course of the pandemic, where people have sat at home and they've bought every gizmo under the sun that they could get their hands on. They've upgraded their computers. They've got this game, that game. Now that is going to fade because there are budget constraints. And if you start spending your money more on going out to eat and traveling, etc., your demand for home products, electronic products, is going to fade. So there are two headwinds that are heading towards Taiwan. Otherwise, the economy, before you consider these, held up reasonably well, which is why they've actually been a bit tighter in monetary policy than, say, countries in Southeast Asia.